Hello there. Welcome back to Financial Accounting at 6. In this video, we want to look at the preparation of notes to the statement of cash flow. Remember, when we are preparing the statement of cash flow, we've got pre-calculations that we do that we need to find before we prepare the statement of cash flow. Remember, we are going to prepare cash, to calculate cash received from clients, and also we are supposed to calculate cash paid to suppliers and employees, and also we need to find the amount that is actually paid in terms of distribution and taxation paid. So you would see that those figures, we find them in the pre-calculation that we do before we start to prepare the statement of cash flow. So we are going to go through those notes to the statement of cash flow. You know that notes to the statement of cash flow comes as pre-calculations that are done before we prepare the statement of cash flow. So we got a question that we want to look at, which is here, which is question 4, and the question reads as standard information provided on the machine. See close cooperation below and answer the questions. So we are given machine close cooperation, and we're given a statement of comprehensive income for the ended 29 February 2016. So you can go through in terms of the elements or components that we're having in terms of this statement of comprehensive income. Then you go to the next page, you see that we are also given a statement of financial position at 29 February 2016, which is the balance sheet. We are given two periods, that is 2015 and 2016. Obviously, this is going to be your previous period, which is 2015, and the current period is going to be 2016, according to the question that we have here. So you can also try to go through the elements that you are given there in the statement of financial position. So I believe that you are given a note which reads property and furniture, and we are given a note that we have there in terms of calculation of the book value of property and furniture. So going down, you'd see that we are also given two periods in terms of 2016 and 2015. And I believe that also there are some few notes that we have beneath that. So we try to see on the next page, that's where now we are having the question. The question is saying draw up following first part, which is 4.1, is saying statement of cash flow for the year ended 29 February 2016, 17 marks, and we've got cash received from clients at 2 marks, and cash paid to suppliers and employees 8 marks, and we've got distribution and taxation paid 3 marks. So according to this video, we are going to look at 4.2, 4.3, and 4.4. We are only going to look at the notes that we need to do before preparing the statement of cash flow. So let's stay tuned for the next video, where we are going to bring the preparation now of the statement of cash flow. So going to our answer section, we want to start with the first part, which is the calculation of cash received from clients. So we can just go to the other section and try to see what do we have in terms of the space that we have created according to this video for the calculation of cash received from clients. So this is the statement that we're going to use as a note for cash received from clients, where we are going to start with sales. So the sales figure, we are going to start with it as a positive figure there. And then we are going to find whether we have got a decrease or increase in debtors. If you have got an increase in debtors, we are going to subtract it, show it as a negative figure. And then if we have got a decrease, we show it as a positive figure. So very important for you to take note of the issue of signs, positive and negative, because they reflect as cash movements. Remember, this is a statement of cash flow. It records the actual cash movements in and out of the business. So whenever there's a cash movement in or out of the business, it's recorded in the cash flow statement. So this is why we are emphasizing on the issue of trying to understand the issue of signs that we are putting a positive, we are putting a negative. So in this case, in cash received, calculation of cash received from clients, we are going to start with sales as a positive figure, and then we check the movement in terms of debtors, if it's an increase or decrease in debtors. If it's an increase, we show it as a negative. If it's a decrease, we show it as a positive. So exactly as that. So we go to our question and try to see the figure for sales that we are given. So we see that sales is given here in the statement of comprehensive income. We've got our sales here, and we've got a figure of 140,000. So we can just try to put that as our figure for sales. Remember, we're saying we're going to show it as a positive. We're going to say 440,000. And then we check in terms of debtors if we've got increase or a decrease. Obviously, we go to the statement of financial position. That's where we're going to identify our debtors. So we are seeing that we are coming from 2015 going to 2016. So the movement that we're going to see there, data is here, and you see that we've got a movement from 6,120 to 56,920. So we are seeing that let's try to see 2015 to 2016, 6,120 to 56,900. So this is an increase. So to find the increase now, we are saying 50,000, 56,920, and then you subtract your 6,120. And obviously, we calculate that, we're going to see that we're going to find the figure is 50,800. So this is an increase of 50,800. And you said if it's an increase, we're going to show it as a negative. So we go to our answer section and I put that one is our increase in data. So here we have our increase. Then we are saying the figure that we got there is 50,800. And we are saying it's a negative figure. And then we try to calculate so that we the figure that we are going to find, we say 440,000 minus 50,800, it becomes 389,200. So this is a positive figure. So you will see that this is the figure that we are going to take to the statement of cash flow as under cash flow from operating activities. We're going to say cash receivable clients, and then we put this figure as a positive, like it is 389,200. So we finish the note for cash receivable clients. So we go to the next note, which is now cash paid to suppliers and employees. So this is the next note that we have of cash paid to suppliers and employees. Obviously, we are also going to start with the figure for sales. If we already know that the figure for sales, we did put it here. It's here with 440,000. So we are saying 440,000, and we are going to put it in the last column. We are saying 440,000. Then from there, we are going to subtract profit before tax. You say less profit before tax. So if you in the statement of comprehensive income we have got a loss, we are going to say less loss before tax. But in this case, we've got profit, so it's less profit before tax. Less profit before tax. So what we are saying is, if it's a loss, we're going to say less loss, but the loss will be negative here, which means we are going to say this one, this sales minus, and obviously it's going to end up being in addition to the sales figure. So this is what we have. So let's try to check the profit figure that we have. We go to the beginning of the question. So you see that profit before tax, we have it here in the statement of comprehensive income. So we are here. Net profit before tax is here. We have got a figure of 55,760, and we're going to subtract it there. So we are saying 55,760, and we are going to subtract. We are saying less, so we can just indicate by putting our brackets. So this is what we have. So we can now calculate to get expenses for the period. So the figure that we are going to get will be expenses for the period. So we'll try to see what you get there by saying 440,000 minus 55,160. You are going to get your answer is 384. Let's just try to see the figure that we are going to get there. 384,240. Right. So when we are getting this, 384,240. We are now maybe here we can just maybe underline to show that we have found this figure by subtracting there. So this figure is an expense. Remember, with this is a statement of cash flow. We are indicating movements of cash in and out of the business. So whenever the expenses, cash is moving out of the business. So at this point, we are going to convert the sign that we have here by putting a negative figure because these are expenses. So basically, we are saying let's just put a negative because we are seeing that the expense figure is positive. If the expense figure was negative, it means we are going to show it as a positive. So let's just indicate there in terms of a negative. So having that now, we can now try to make some adjustments. So we can just say adjusted for. Adjusted for, and then other adjusted for, we are going to look for items like non-cash items. We're going to look for depreciation, profit or loss on disposal. Those are some of the non-cash items that we want to adjust at this point. So let's just try by starting to look for those non-cash items. So if you go to our statement of comprehensive income, that's where we're going to find those non-cash items. But you'd see that we have depreciation stated here. As for 19,400, 19,408, this is our depreciation. It's one of them. Then we can check also profit or loss on disposal. If we have it, we see that we've got loss on furniture, which is 10,000 here. So we are going to adjust for that. So we can just pick those two at the moment and then go there and adjust them. So we have depreciation. So we're saying depreciation. And we are saying as depreciation, we are going to add it. Remember what we are doing here, we are removing on the preparation of our statement of cash flow, we are going to start with the figure for profit before tax. So remember, when we calculated the profit before tax, we adjusted for non-cash items. So here we are reversing them. We are removing them because we want to be left with items that are representing actual cash movement. On depreciation, there's no cash movement. It's a non-cash item. So that's why we are trying to adjust it so that we remove it, and we are left with items that were adjusted in terms of comprehensive income that were cash items only. So at first, when we found our profit before tax, we subtracted our depreciation. So at this point, we are just going to do the opposite so that we remove it. Now we are adding it so that we remove it. So we say we are going to show it as a positive, which is 19,408. So here we are saying 19,408. And then we come here. Remember, we identified again loss on sale of furniture. Loss on sale of furniture. So remember, initially loss on sale of furniture in this segment of comprehensive income, we subtracted because the loss is an expense. But now we want to remove it since there is no cash movement in terms of loss on sale of furniture. We are also supposed to show it as a positive, which is 10,000. So if it was profit, it means we are just going to do the opposite. So this is what we have. So we go and check again. Now we want to check for interest received and then interest paid also. Why do we adjust for interest received and interest paid? They are cash items, but we adjust them here because we are just trying to reverse them so that we readjust them again when we go to the statement of cash flow under operating activities. So this is just a disclosure procedure that we remove it at this point, and then we take them back again in statement of cash flow under operating activities. So we are going to check if you've got interest received, interest paid in the statement of comprehensive income. So we are saying here, starting from the beginning, we have got interest received, 4,000. So we are seeing that at first we added it. So at this point, we are just going to do the opposite, we subtract it. Then we also have interest on members' loan, which is 20,712. We are seeing that this interest on members' loan, at first we subtracted other less expenses. But now we are going to do the opposite. We are going to add it. So that's what we are going to do for interest on members' loan. So we just pick those two, which is interest on members' loan and interest received. So we go there. So we are saying interest received, we have an amount of uh, 4,000. We said we're going to show it as a negative, so we are just going to show it as a negative here. And then we have also interest on members loan. Interest on members loan. And then on interest on members loan, the figure that we identified there was 20,712. We show it as a positive because this is an expense. Initially, it was subtracted, so you are now doing the reverse. And then having that now, we also go and check if you have got salaries to members. Salaries to members also is supposed to be adjusted at that point. At this point, we go to question. So you'd see that we have salaries to members here. We have 96,000. So here it was under less expenses. It was subtracted. So there we're going to do the opposite. We are supposed to add it there. So we go there. So we are saying here we've got salaries. Salaries to members, and then the figure that we have is 96,000. And we are saying we show it as a positive. So these are some of the items that we are going to look at. Right. So after that, now we can look for working capital changes. Working capital changes. Let's say working. Working capital changes. So on working capital changes, remember when we're calculating working capital, we say current assets minus current liabilities. So we are going to look at components of current assets and then components of current liabilities. So on current assets, we are going to look for stock. We are going to look for stock and only stock because for debtors we've already adjusted it. So we are going to look for stock and see if we have got an increase or a decrease of stock. But we are going to see that if it's an increase of a current asset, we show it as a negative. And then if it's a decrease, it's a positive. The opposite is true when you've got current liabilities. Current liabilities, we're going to look for a change in creditors. If it's an increase in creditors, it's a positive. So it's a positive relationship. Then if it's a decrease, it's a negative. So this is what we have. So we go there and try to see in terms of the elements that we are having for current assets first. So obviously we go to the statement of financial position and look for those changes. We start with current assets. So current assets, we see that we have our inventory here, and we are seeing that it's coming from 15,000 to 19,760. Remember, this is the previous year, this is the current year. So it's 15,000 to 19,760. So we're going to say 19,760 minus 15,000. And let's try to calculate it. There, we're going to get 4,760. So, and this is an increase. So we're going to show it as a negative. So we go back there. So we are saying here, what increase in stock? Figure that we have is 4,000. Can show them in this column so that the total, we can show it as working capital changes, 4,760. And we're showing it as a negative. Then we check in terms of if you have got anything that we can adjust under current assets, then we move on to current liabilities. So we still we have cash. Cash we don't adjust it at this point because cash is the one that is going to show the cash movement. We are looking for cash movement, so we cannot adjust for cash at this point. So we only adjust for our inventory, which is our stock. So we can go to current liabilities now, where obviously we are going to pick the creditors. So creditors, we are seeing it here, and it's moving from 2,400 to 36,660. So basically the change that is going to be there, it's 36,660 minus 2,400. Calculate it correctly, you're going to get a figure of 34,260. And we see that this is an increase, so we're going to show it as a positive. Remember, I said when now it's liabilities, we do the opposite. When it's an increase, we show it as a positive. So we go there. So we are here. So we're saying now increase in the creditors. So the figure that we got there is 34,460. And we said we're going to show it as a positive. So what we're going to do there, we're just going to say negative 460 plus 34,260, and we're going to get a positive 29,500. So this is just going to come in line with this working capital. So you're saying 29,500 as a positive. So we can now get the final figure here. So the final figure, we are always going to use the last column to calculate the final figure. However, we are saying we start from here, negative 384,240 plus 90,408 plus 10,000 minus 4,000 plus 20,712 plus 96,000 there. And then after 96,000, we are going to also add our 29,500 and see what do we get there. We are here. So the final answer that we are supposed to get there is going to be positive. Let's try to see. Let's try to adjust it and see what figure are we getting there. Let's try to calculate. So the final answer that we are going to get there, it's a negative 212,620. So this is, we can show it in brackets so that we got a negative figure there. So having that now, we can now move on to the last note that we have. Let's try to see. So on the last note, we've got distribution and taxation paid. So on distribution and taxation paid, we're going to start with the amounts unpaid at the beginning for distribution and then for taxation. So we go to the statement of financial position. That's when we are going to find those figures under, obviously, under current liabilities. We see that we've got our distribution to members here. And then the taxation is being represented by revenue receiver of revenue. So this is our taxation, which is our receiver for revenue. And then we have got this one is the opening balance is this side. Well, this is the area here that we have. So we see that we have got 2,200 for taxation, 2,200. And if taxation is under current liabilities, we show it as a negative opening balance. But if taxation was under current assets, we are going to show it as a positive. So this is what it is. So we have got a negative 2,200. Then we look for distribution to members is just below that. We have got 2,108 again, which is going to be an opening as a negative again. So we go there. So we are saying for distribution, the figure that we got there is 2,180. We are saying it's a negative taxation again. We've got a negative of 2,200. A negative. And then beneath that, now we are going to uh, adjust for amounts according to the income statement. Amounts according to the income statement. So obviously, on the amounts according to the income statement, we have for distribution and taxation. So let's start with the distribution, and also have taxation. So we go to the question and try to see what figures do we have for those two. Right, according to the income statement, we go to the statement of comprehensive income. And for tax, we have this one, taxation, and we have an amount of 27,884, which is here. And then for distribution, we have got here, which is 24,000. So these are the two. Distribution is here, which is 24,000. So we can just pick those. So for distribution, we can just put the line in distribution and say we are saying the amount is 24,000. And we know that they are indicating our cash movement moving out, so we show them as a negative. The same to taxation, we've got 27,884, and also show them as negative. So this is exactly at the end of the year. So we are now going to adjust to adjust for amounts unpaid at the end of the year now. Amounts unpaid at the end of the year. Amounts unpaid at the end of the year. So we can just go there and try to identify them, find them again in the statement of financial position. Remember, we identified in the beginning, we had this one in, let's just try to see. We have this one and this one. So at the end, it's now 15,280 for taxation. And then we've got 12,600 for distribution to members. So in this case, at the end, we are not going to subtract them like what did at the beginning. At the end, we do the opposite. We are supposed to add them. So we go there. We are saying for distribution, we put it in this column, we've got 12,600. Then for taxation, we have got 15,280. For having done that now, we can now be able to find the closing amount that we need to transfer to the statement of cash flow. So having done this now, we can now say in the first column, that is for distribution, we are going to start at the beginning. We've got a negative 2,180 minus 24,000. Then plus 12,000, 12,600? Yes, plus 12,600. And then the final answer that we are supposed to get there is 13,580. 13,580. So let's just try to see. 18,500. 2,280. And we are saying the answer that you are getting there is a negative answer. Then we go to the last column whereby we are saying negative 2,200 minus 27,884 plus 15,280, and we're going to get a negative 14,804, which is a negative. So these are the two amounts that are going to represent in the statement of cash flow. So this is what we have, guys, according to this video. Let's stay tuned for the next video as we prepare the statement of cash flow. Let's subscribe and share. Let's share the link to our colleagues who are doing financial accounting N6. As for this video, I'm signing out. We'll meet again in the next video.